Hello traders, in today's lesson we're going to cover what's a hidden order block. So what is a hidden order block? It's an order block that is located in the premium area prior to the bullish break, and it's an order block that is also located in the discount area prior to a bearish break. The candle is a representation of orders being injected into the market to break structure and force price to break range and possibly even change market direction. The main characteristic you want to look for when it comes to a hidden order block is the struggle prior to the break and watch orders accumulate in real time. The origins of this move preferably coming from a purge or a reaction from a purge. So you want to stop hunt that occurred prior to the move that later on leads to the move. So your cause to the effect would be the purge. So for overview, before we get into the in-chart examples, this is the main idea. So you have your structure break right here. So as you can see, structure did break and it's coming back into the range. But prior to the structure break in this area, as you know, guys, this would be the premium area. In the premium area, a lot of times there is a supply candle. So let's say there's a supply candle here. And even if you can't see the candle visible, you know that there is something responsible to push price low and that caused this entire move. So what caused this entire move? The orders injected here. So knowing that there's still orders here, when price approached this area, you can see it struggled to fully break through this area. It called back, and sometimes it would even call up multiple times, form a mini compression. And this would be your demand hidden order block. So that coil back. Why is this important? Because there are buy orders injected here to force this break of this supply candle. So the sell orders that are in this area get overtaken by the buy orders that are inputted in this area. So that's why we call this a hidden order block, and that's why it's actually a powerful trading strategy. For one, it's a continuation, so it's not like you're risking a reversal. You're not going against the trend. You're not counter trending. You're going along with the momentum. You're going along with the order flow. So when price breaks through this area and these buys overtake these sell orders, what happens is when price comes back, there's still orders left because remember, there's buy orders injected here because price found resistance right here from this demand level or whatever they may be, and buy orders start piling, but it still was enough to take this order. So there was still assistance from this area, those orders coming in from this area. So by the time price break through and used the buy power from this area to make this small move, when price comes back, there's still enough orders left to push price further. And this is why the strategy is elite. But the catch is you don't want, let's say, your structure break right here. You have your hidden order block right here and price breaks. You don't want price to go on a separate voyage and later on come back here. You don't want that. You want an instant pullback. You want it to come out for air and right back into our zone. Why? Because if price goes on its own separate movement right here and develops new structure and carries on, it already used the buy power that's in our hidden order block. And here's another example. Right before price structure broke bearish in our discount zone, we had a supply candle develop. So the supply candle develops. So when price does come back here, it's more likely to use this as a reaction to continue lower. But let's say price continued lower, and eventually came in this area. Price already used the sell orders in here because we had the buys right here. These sell orders overtook these buy orders. So by the time price comes back here, he used the sell orders were injected to make this entire move. So by the time price comes back here, the buys are much greater than the sell here. So it's probably going to run through this area. So here we have our hidden order block. So what happened? Price was pushed down. So we know that there's sell orders right here. These sell orders were used to push price down. But price found resistance and buys started coming in. But the buys that came in failed to break the structure. That's why price showed what? Showed struggle into breaking this structure, right? And another way to look at it too, price did not react, of a significant demand level, right? There's no clear demand level to push price up. That's why previously I said you would want the the origin of your hidden order block to come from a purge. We don't want a full-on seller trap because that would insinuate something completely different, but we would want a reaction basically out of nowhere, and a lot of these out of nowhere reactions come from a purge. In this case, it would be a FTC, so price is incentivized down the line to come break through this level. But as the candle formed right here, we can tell that price found exhaustion right here. There was not enough buy orders coming in this area, this area, this area to push price through. That means the sell orders were overpowering. So what price did, it reacted of this area. So what's going to happen now? More buy orders are going to get injected to break through this area. And we don't guesswork this. In this instant, we would wait for price to break. And once price break and closes above, as a candle close, any retracement back to this level would insinuate that we could use this hidden order block for a buy. So you could have your stop loss here, right under the candle, because anything under the candle breaks. Sometimes it could wick through and continue going bullish, but a lot of times you got to remember our safety net right here is our FTC. The fact the price broke this area, we know that it's going to target the FTC, so you're more than likely going to lose the trade. That's why you can afford to have your stop loss tight. And what you could do is you can have your entry right at the structure range, or you could have it at your hidden order block body, or you could have it at the 50% of the body. So it's up to you, right? But in this instance, let's use the range. So you're waiting for a bounce back into the range and a reaction, and you always go for a 2-to-1 in these just because you can afford to have a small stop loss. You can afford to have a stop loss. Why? Again, because you have your FTC as a protection. You got to know that price is going to attract to this level like a magnet if it breaks through this level. Why? Because there wouldn't be enough buy orders to push price forward. What does that mean? That means the ultimate reversal. That means now you can start looking for price to build lower, retrace, build lower, and this will be a complete directional change. And this would be a directional change on the macro level too, just because of the clues that we have here. Another example of a hidden order block. Again, first thing you want to see is where the origin is from this move. So you look to the left and you can see that the price is not reacting from a significant level. Again, if the origin of this hidden order block right here, if the origin of this move was right here, so let's say price went up here, price went up a little bit here and reacted from this area and then broke down and then formed the hidden order block right here, this would be a bad trade. Why? Because the origin of this entire move is a place of interest. So you would want something like this where it's not really reacting off anything significant. And preferably if you can have a purge. If it's coming from a purge, that gives it a way higher percentage. So this would be the same thing. You would wait for a reaction for price to come back into the range, and you would go for your initial 2-to-1. You could stretch it out for a little bit for a bigger trade, but in my advice, a lot of times price is more than likely to get back into the range and reach for a deeper level before retracing again. And that way you have to have a bigger stop loss, and you want to avoid that. So stick to the 2-to-1 or try different things out and see what makes you feel comfortable. So here we have an incorrect hidden order block. Why is it incorrect? Because it did not happen in our discount area prior to the bearish break. This happened post the breakout. So the hidden order block should happen somewhere right here. But in this case, price broke and came back into the range. The fact that it already broke the range, then formed the candle, that's invalid. You would want the hidden order block to occur before the structure breaks, somewhere right here, form, and then break, and then retrace, and then come back. So here we have a much further out hidden order block. Why is it hidden out? Because it's not in our discounted area. But the reason we would use this as our hidden order block, just for the simple fact that price reacted from the discount area. multiple times and failed to break, which means that this area was overpowering this area. So the fact that they inputted the orders in this candle to push price lower, that means there's still a lot of money left, because look at the amount of taps. Price was trying to break this area, but it couldn't do it. And the main objective here was this demand candle. This demand candle was stopping price from breaking lower. It tapped it once, twice, three, four, five. That's 5 taps of a failed attempt to break this level. So when price did go above, reach for our fair price, institutions injected more orders and more orders. So as they injected more orders, price finally pushed down. So when price does come back to this level, it's more than likely to reject. Why? Because there's still orders left. And why are these taps significant? Because this is the amount of times the price tried to break this area. And most importantly, ignore the fact that there is a institutional candle here, order block. The fact that this is a discounted level and price institutions buy a discount and price tried to rally up from here multiple times, that just proves that this was a significant area. So when price does come back, you go for your 2 to 1.